We're sort of taking a kind of cautious approach given the kind of macroeconomic and kind of outlook for markets. We think markets have got ahead of themselves this year. There's been sort of mixed results out, and I think generally we're just slightly cautious about the outlook and potentially the recession pressure that could start to kind of play into markets as we get into the second half of the year. So at the moment, we're just a little bit more cautious.
We've had a lot in the way of earnings crossing various sectors, various stocks, and there's been a lot of reactions out there, but you're also not even fussed when it comes to sectors, which don't seem like they're sort of evenly balanced at this point. Why are you also not even looking at sectors?
I think it's more geographically. We've not really got any conviction on sort of any area just now. I think US has, reporting season has been very much tilted toward the FANG companies. We've seen sort of more big tech reporting, and a lot of the gains have come from that. I think we still feel with China, they're obviously coming out of their post-COVID kind of shutdown, and we're still not kind of seeing a lot coming through. Certainly manufacturing data there was a little bit weak, so we've not really got a lot of conviction on the kind of potential growth story there. And I think we're still kind of cautious about European markets, in particular the UK, given the kind of economic backdrop there. So at the moment, I think there's not one sector we've got real conviction in, so we're kind of playing a fairly neutral approach.
I mentioned the string of central bank decisions this week. We've got all of them all out on the ticket, all talking, all expected to do something. So it's quite key. Maybe the Bank of Japan not so much, but still I think there's a lot of caution around what that central bank could do. When it comes to the playbook for the Fed first up, the market has been watching this banking turmoil play out. We had fresh news flow over the weekend. What happens next? Because some are cautious that they've got it wrong, that we've got this stubborn inflation story playing out, that the central bank is still not quite getting inflation back to a level that's manageable at this stage. But all we've got seemingly another 25 basis points and then we're done. Could that scenario be wrong? Could we have more action from the central bank because of what is entrenched inflation and now some price gouging that's kicked off in some areas of the economy?
I think this week I think that the market's pricing in the kind of 25 basis point story. But you're right, inflation has been really sticky, and the Federal Reserve have made it very clear that they want to reduce inflation at all costs. So I don't think anything's off the table at this stage, but you have to kind of look at the fact that GDP data last week was weaker than expected. So you feel as if maybe the actual action they're taking is starting to kind of play out in markets, and there has maybe been a bit of a delay in that happening. So we think there's going to be one more rate hike, and then after that there will be a pause. We're not convinced that there's going to be the pivot later on in the year, and we think rates will stay higher for longer because we think inflation will still be the factor that's going to govern what's going to happen more than anything else.